Thank you for taking time out of your day to join us today. Your entire AHOLA family is hoping everyone is healthy and washing their hands often. The purpose of this webinar is to continue to assist our clients in confidently navigating what feels like an ever-changing landscape of the Families First Coronavirus Response Act and the multiple provisions contained within it. My name is Carrie Horton, and I am one of the Payroll Operations Support Managers here at AHOLA, and I'm here with you today to discuss the Families First Coronavirus Response Act, or FFCRA. So as we get started, just a few housekeeping items to note. Our intention is to help our clients take full advantage of the programs and provisions that were created to assist businesses, especially smaller businesses, to survive this crisis and remain viable. We strive to keep you informed and provide easy access to many resources through our website and our social media outlets, but we also recommend that you consult with a trusted business advisor, such as your attorney, CPA, or other qualified professionals when choosing the programs that your business will participate in. Some of the programs and provisions cannot be used in conjunction, so it is important to review the options and decide which programs will best suit your business. Today, we will discuss how AHOLA is handling the entry of FFCRA qualified sick and family leave pay, and what information we will need from our clients in order to enter this pay information accurately. We will also touch on the tax credits for paying qualified leaves, what they look like in the payroll system, as well as your options for additional credits for applicable health insurance amounts. As part of this discussion, we will also review the new spreadsheet template that has been created to assist you in supplying your sick and leave pay information to AHOLA. With all of that out of the way, let's get to the important and complicated business of FFCRA qualified leave pay. Some important things to remember about FFCRA qualified leave pay are that it is only applicable in certain specific situations. The spreadsheet that we will be reviewing today will allow you to communicate to AHOLA when you have employees that find themselves in these specific situations. If you have requested FFCRA qualified leave pay earnings to be added to your account, you should have received from your dedicated processor an FFCRA client acknowledgement form. This form informs AHOLA of the codes you are requesting and defines the situations in which each would be used. Clients that have COVID codes set up will receive the FFCRA earnings timesheet. This timesheet is an Excel template that should be completed and submitted for each and every payroll where FFCRA qualified leave pay is paid to any employee, preferably at least 1 day prior to your payroll process date. So let's walk through the new template. In case you have not seen it, here's what it looks like. So please be sure to complete the top section with your client information and the pay date that the indicated FFCRA payments are to be paid with. Down below in column A, employee name is self-explanatory, but note that you will only need to complete this form for employees receiving FFCRA qualified leave pay. In column B, please enter yes if this is the first time the employee is being paid FFCRA qualified leave pay. There are additional setup steps that AHOLA needs to take to prepare employee records for qualified leave pay, so please let us know by indicating yes here. Column C indicates the employee's employment status, full or part-time. This is important because it impacts the hours the employee is entitled to under the Act. In column D, please indicate the hours the employee is or would normally be scheduled to work in a week. If an employee's schedule varies, you can use the average weekly hours worked over the last 6 months. Once you have entered hours in column D, the formula within the spreadsheet will multiply by 2 to give us the maximum payout hours for part-time employees. Full-time employees should have 40 hours entered here for a maximum of 80. Columns F, G, H, and I should have actual hours to be paid allocated to the correct leave type. These leave types, code A, B, C, or D, correspond to the situations listed on your code's acknowledgement sheet. So we'll refer again to our slide showing the definition portion of the acknowledgement. It is very important to be sure that you are entering hours to be paid under the correct situation codes, as these do affect the rate of pay at which the hours are paid. Please use these codes because the use of these codes also triggers tax credits and exempts certain taxes. It is imperative that these be used only for payout of qualified leave pay for the specific situations allowed by the FFCRA. If you are unsure which code is appropriate, please consult the acknowledgement form for definitions or email AHOLA's COVID support team at covidsupport@ahola.com for assistance. A special notation reminder about hours entered in columns G and H. Do not prorate or reduce hours to account for 2/3 of pay. These earnings codes are set up systemically to reference the regular rate of pay and recalculate at 2/3. Another point about regular rate of pay, and I'm using air quotes here, is that FFCRA states that COVID leave pay hours are to be paid at regular rate of pay. This rate is defined by DOL under the Fair Labor Standards Act, and the calculation of it factors in all extra earnings that an employee receives, including bonuses, commissions, differential pays, and tips. Therefore, an employee's regular rate may be substantially higher than their flat hourly rate if they have additional wages, and sick leave pay hours will be paid at this higher rate. This is also the rate that is referenced for the 2/3 calculation on family and emergency FMLA. Let's look at an example. You have a part-time employee, Jacob Black, who is scheduled to work 25 hours a week. He would be entitled to a maximum payout of 50 hours. But because his self-quarantine due to possible exposure started on the last day of the current pay period, you are only paying him for 8 of the 50 hours he is entitled to on this particular payroll. This is how your spreadsheet entry for Jacob would look. Because he is quarantined due to possible exposure, his hours fall under the A scenario. So his hours would be coded to COVID sick EE in time entry. COVID sick pay hours that are being paid out but do not fall under any of the specific FFCRA qualifications but are still related to the coronavirus pandemic can be paid out and tracked under code D, or COVID sick other. Hours paid under this heading are not exempt from any taxes and do not apply to any tax credit amounts. Next, columns J and K are where the fun really starts. Because all of this legislation was not enough to try to digest, we'll add in the additional credits that you may be allowed to take against your tax liability. One of the benefits that the FFCRA provides is that employers may claim tax credits on payrolls with FFCRA pay. The total of the credits is determined by 3 items. Number 1, the gross amount of wages paid under the qualified FFCRA codes. Number 2, the employer portion of Medicare tax on the FFCRA wages. And number 3, the costs associated with providing health care during qualified leaves. Let's look at how to determine the qualified health plan expenses. If your employees contribute to their health insurance on a pre-tax basis, meaning that your plan is qualified under Section 125, you may elect not to withhold their portion of their pre-tax health insurance from their FFCRA leave pay only and cover the payment to your insurance plan. If you choose to make the payment to your plan provider without withholding from the employee, you may claim credit for the portion that applies to their qualified leave pay. As an example, your full-time employee normally has $100 withheld from their biweekly payroll for a Section 125 health plan. In this instance, the employee is being paid 40 hours of regular pay and 40 hours of COVID sick pay. If you elect to take the additional health insurance credit, you would withhold only $50 for Section 125, the amount of insurance that is allocated to the regular pay, because only half of this pay this time is regular. The remaining $50 would be paid over to the insurance company by the employer, but would also be added to the amount of the gross that is the COVID leave pay to be taken as credit against the 941 tax liability for the current payroll. For this example, if the employee's regular biweekly wage is $1,000, your employer tax credit would be $500, the half of this pay that is COVID sick, plus $50 for his health insurance because you are paying it and taking credit, plus $7.25 that is the employer match amount of Medicare on the COVID sick pay. In this example, you'll notice an asterisk on the qualified health expense. This is because in addition to taking credit if you are paying your employee's share of pre-tax insurance, if you, as the employer, pay a portion of your employee's monthly premium, you may take additional credit for this amount as well. So when you are completing this spreadsheet, if you have qualified pre-tax plan and will be taking advantage of either or both of these credit amounts, please enter the amount of the additional credit in column K. Keep in mind that this would only be the employee portion that applies to the leave pay that you are paying and an allocated portion of your cost as it applies to the leave pay. In other words, if the employee is paid 40 hours of FFCRA qualified leave, the amount of the additional credit for your employer portion of health insurance would only be approximately 1/4 of your monthly amount. More specifically, your monthly premium divided by 173.333, then multiplied by 40. Remember that if you have both, the amount entered in column K should be the total of both amounts as they apply to the leave pay. If you are unsure if your plan is a qualified pre-tax Section 125 plan, or you have questions about employer-paid portions of premiums, please contact your insurance broker for assistance before submitting credit amounts to AHOLA. Another thing to keep in mind is that the employer cost does not necessarily need to be reported each pay. You can hold that information and report to take credit monthly or even quarterly. Just remember that it does need to be only the cost that applies to the portion of the pay that is FFCRA qualified leave pay. So once you have completed your spreadsheet, please return the completed form to your dedicated processor, as well as to our COVID support team by copying us on your email. The address again is covidsupport@ahola.com. Please make a notation on your regular payroll authorization to note that you have submitted COVID leave hours separately. Clients that are remote direct process can enter, review, and balance all other payroll information, but should not process payroll until you have received confirmation email that FFCRA qualified leave pay has been entered into time entry. So now that we've completed and submitted the form, let's take a look at what the COVID sick pay looks like in the system and what the tax credits will look like on your payroll summary. All of the COVID sick codes, employee, family, and FMLA, or scenarios A, B, or C, are exempted from the employer portion of Social Security. So wages paid under these codes will not allocate wages to employer Social Security, nor will they calculate taxes. We are recommending that these wages be processed on a separate check for ease of identification and potential future reporting. So you will see COVID wages paid as separate entries and potentially a second direct deposit or additional check for employees receiving FFCRA sick pay. When reviewing your payroll summary, you will notice that the employee and employer wage and tax amounts for Social Security will not be the same if there are FFCRA qualified leave wages paid on the payroll. In addition to being exempt from employer Social Security, as we mentioned earlier, these earnings also trigger credits against your company's 941 liability. Under the FFCRA, employers may take credit for the full value of the COVID sick or family leave pay paid out to employees. In addition, this credit also includes the employer's portion of Medicare tax that applies to FFCRA qualified leave pay. Here is an example of what page 1 of the payroll summary will look like for our example of Jacob Black being paid 8 hours of FFCRA qualified leave pay. Jacob's qualified leave gross plus the employer matching portion of Medicare make up the credit amount shown here. Notice that the tax liability of $55.75.72 is reduced and the impound amount reflects the credit reduction. Now let's look at the qualified health insurance cost credit. If an employer pays $1,000 in FFCRA qualified leave pay and elects to cover the employee's Section 125 of $50 and take credit for $25 of their cost for health insurance, the employer would see a total credit of $1,089.50 against their 941 liability on the payroll that the sick pay was paid out. You'll see here on the payroll summary that the credit amount is listed and the impound amount is again reduced by the credit amount of $1,089.50. The credit amount being made up of the qualified leave wages gross, employer matching Medicare on the leave wages, plus the combined cost of health insurance, $50 that the employer is paying on the employee's behalf, along with the value of their employer-paid healthcare cost. Another important point to mention is that because the IRS is, in a manner of speaking, footing the bill for FFCRA qualified leave pay by allowing employers to reduce their tax payments, documentation to prove that these payments are qualified under FFCRA will be very important for employers paying these qualified leave wages and applying the associated credits. For leave based on quarantine order or self-quarantine advice, the request should include the name of the governmental entity ordering the quarantine or the name of the healthcare professional advising self-quarantine. If the person subject to quarantine or advised to self-quarantine is not the employee, that person's name and relation to the employee should be included. For leave requests based on a school closing or child care provider unavailability, the statement should include the name and age of the child or children to be cared for, the name of the school or place of care that has closed, and a representation that no other person will be providing care for the child during the leave. If a child who needs care is 15 or older, the employee must affirm that there are special circumstances but need not explain them. The IRS otherwise assumes kids 15 and older can take care of themselves for the length of a workday. According to the DOL, this is the extent of the documentation you may require. For more information or clarification about the required documentation, you can visit our website or review the IRS's frequently asked questions. IRS FAQs can be found through the link on ahola.com or at www.irs.gov. So to wrap up and recap this session, we've reviewed the sick pay submission spreadsheet and defined the additional information that must be provided to us in order to take full advantage of the available tax credits. We took a peek at what qualified leave pay earnings look like in time entry and saw how the credits will be displayed on your payroll summary and how they will affect your tax impound. Finally, we spoke about the importance of determining FFCRA qualification and eligibility and retaining the proper documentation of requested leaves. We are here to help, so please email questions or concerns to covidsupport@ahola.com. Our website is also a great source of information and resources related to COVID-19, so please visit us there often as new information is frequently added to our resources page. Here are some additional websites where you can find valuable information concerning COVID-19 legislation. Just a final reminder that we are committed to continuing to assist during this crisis. To that end, we are bringing you additional informational webinars in our 10-Minute Tuesdays. These short informational sessions address relevant and developing information related to COVID-19 every Tuesday morning at 8 a.m. Again, we thank you for choosing to spend your valuable time with us today and for choosing to partner with us every day. Stay well and keep moving forward.